In most cases, Canadians have to take the stress test before they can get a mortgage. And we'll come back to the most cases part in a bit. The stress test is a calculation that is meant to check and ensure that everyone who gets a mortgage is also going to be able to afford it if rates go up like they just did. But there are a few reasons why people might still be struggling to pay their mortgage even though they passed the stress test when they got it. So number one is that the stress test looks at how much money you're making at one particular point in time. And as I mentioned in the last video, there's a bit of a risk of a recession right now, which could mean that some people lose their job and therefore lose their income. And another thing to keep in mind is that people's financial situations change all the time. They might, for instance, have kids, or they might get loans to cover renovations or cars. Some people get sick sometimes. There's tons of reasons why, even without mass layoffs, people's income sometimes goes down. And finally, but really importantly, stress test doesn't apply to all mortgages. For example, credit unions or private lenders don't always have to use the stress test on their uninsured mortgages. And just a few months ago, the Globe reported that the number of people who are using private lenders is actually going up. And it's particularly popular for people who can't pass the stress test. Defaulting on a mortgage is still pretty rare in Canada, but that doesn't mean that people aren't struggling financially to afford their mortgage payments, and some might even have to sell their house. So it's important to keep in mind that the stress test isn't always saving everyone in every situation.